This man is the con artist who orchestrated the largest Ponzi scheme in history, defrauding investors of approximately $65 billion. $65 billion. That's more money than the entire yearly budget of some countries. And it didn't disappear in some stock market crash or a bad business deal. It disappeared because for almost 30 years, one man kept telling the same lie, and somehow almost everyone believed him. And his story has everything. A retired couple who lost their life savings overnight, a famous charity that watched its entire fortune disappear, a financial expert who tried to warn the government for nearly a decade but got ignored, a confession that shattered a family forever, and an ending so dark that it led to not one, but two suicides. This is the story of Bernie Madoff. But here's what makes this story so disturbing. Bernie Madoff wasn't a criminal operating from the shadows and running from the law. He was one of the most respected men on Wall Street. Banks trusted him, celebrities invested with him, and regulators believed him. Even his own two sons, who worked in his company, had absolutely no idea what their father was really doing until the day he finally confessed. So how did one man fool investors, banks, regulators, and the entire financial world for nearly 3 decades? And to answer that, we have to go back to where it all began. Bernie Madoff wasn't born into money. He grew up in Queens, New York, in a regular working-class Jewish family. Nothing about his childhood suggested he would one day become a future Wall Street legend. As a teenager, he worked as a lifeguard on the beaches of Long Island. He installed sprinkler systems to earn extra money. This was a young man just trying to earn a living, not someone people expected to become a Wall Street legend. But Bernie had big ambitions. In 1960, at just 22 years old, he took $5,000 he had saved up, and he started his own company that was called Bernie Madoff Investment Securities. At the time, it was just another tiny Wall Street business, and nobody could have guessed what this unknown firm would eventually become. Bernie was smart, and year after year, his company started to grow. He didn't just play the game everyone else was playing, he helped change the rules of it. While many brokers were still trading stocks over the phone and writing orders on paper, he saw the future. He believed technology would transform Wall Street, and his company became one of the earliest believers in electronic trading. His firm helped build the technology that would eventually become the NASDAQ stock exchange, one of the biggest stock markets in the entire world. Years later, Bernie Madoff became chairman of NASDAQ itself. Think about that for a second. The young lifeguard from Queens was now sitting at the very top of Wall Street. He became one of the most respected names in American finance, and wealthy investors considered it a privilege if Bernie Madoff agreed to manage their money. By the 1990s, his reputation was almost impossible to question. But behind the polished office and the expensive suits, behind the reputation that everyone admired, there was another business quietly operating, a business that almost nobody was allowed to see. And that business would eventually become the largest Ponzi scheme in history. And that's where our story truly begins. Bernie Madoff's company claimed to take investors' money, invest it in the stock market, and deliver steady, reliable profits year after year. But behind those closed doors, Bernie Madoff wasn't investing anyone's money. Picture it like this. Imagine a bucket with a hole in the bottom. Every time new water gets poured in from the top, some of it leaks out. That's exactly how Bernie's business worked, except instead of water, it was money. And instead of a leak, it was Bernie quietly pouring investor money out to pay off older investors. When a new investor puts money into his fund, Bernie took part of that money and sent it to older investors, calling it profit. No stocks were being bought and no trades were happening. There was no real strategy at all, just new money paying old investors. It's one of the oldest scams in history, often called a Ponzi scheme. And as long as new investors kept joining, the illusion stayed alive. But Bernie knew that simply telling people they were making money wasn't enough, so he had to prove it. Every month, his investors would receive a detailed account statement in the mail, clean, professional, and full of numbers, stock names, dates, and trades. It looked exactly like something from a legitimate Wall Street firm. The only problem is that none of it was real. Behind the scenes, on an entirely separate floor of his building, a small team spent their days creating these statements by hand, fake trades, gains, and proof. Some of these trades were even dated for days the stock market was closed. Bernie's returns were almost impossibly perfect. Year after year, he delivered somewhere around 10 to 12%. It didn't matter if the market was booming or crashing. Bernie's numbers barely moved. In the real world of investing, that simply doesn't happen. Markets go up and down, and nobody, no matter how brilliant, beats the market every single year. But investors weren't complaining. Their statements said they were making money consistently, safely, and every year. The illusion was working perfectly. But no lie this big can stay hidden forever. Somewhere out there, one man had already started doing the math, and what he found terrified him. While almost everyone on Wall Street admired Bernie Madoff, one man looked at his numbers and immediately knew something was wrong. His name was Harry Markopolos, a financial analyst who was very good with numbers. In 1999, his boss asked him to try to replicate what Madoff was doing to build a similar investment product that could compete with him. Markopolos sat down with Madoff's returns, ran the math, and within just a few hours, he said that the numbers Madoff was reporting simply could not exist in the real world. No real investment could make steady profits like that every year, with almost no losing months. Something didn't add up, and when the numbers don't add up, that means someone is lying. Harry did what he believed was the right thing, so he went to the SEC, the government agency responsible for protecting investors. And in 2000, he sent them his first report, explaining exactly why he believed Bernie Madoff was running a massive fraud, but the SEC did nothing. Over the next several years, Markopolos would submit report after report, each one more detailed than the last. At one point, he handed the SEC a document listing nearly 30 separate red flags, practically begging them to investigate. But every time he was ignored, and the more he looked into Madoff, the more convinced he became that this wasn't just a bad investment. It was one of the biggest financial frauds in history. For almost a decade, one man knew the truth, but nobody listened. And while regulators looked the other way, more investors trusted Bernie. More families handed over their savings, and billions of dollars continued flowing into a scheme that should have been stopped years earlier. The truth wasn't hidden. It was sitting in plain sight, and all they had to do was listen. By 2008, the world was in the middle of the worst financial crisis in decades. Banks that had stood for more than 100 years were collapsing, stock markets were crashing, and millions of people were rushing to pull their money out of anything that looked risky. For Bernie Madoff, this was the one thing his scheme could never survive. For almost 30 years, his business had depended on one simple rule. New investors' money paid the old investors, so as long as new money kept coming in, the illusions stayed alive. But now, everything had changed. People weren't investing anymore. Instead, they wanted their money back, and that's the one thing Bernie couldn't give them. By late November 2008, investors had requested nearly $7 billion in withdrawals, money that simply didn't exist because it had never been invested in the first place. It had already been used years earlier to pay other investors. For the first time in nearly 3 decades, Bernie Madoff had nowhere left to hide. There were no more numbers to move, no new investors to keep the scheme alive, and the lie had finally reached its end. On December 10, 2008, Bernie asked his 2 sons to come to his Manhattan apartment. Both of them worked at the company and trusted their father completely. When they arrived, Bernie told them the truth. His investment business was one giant lie, and there had been no secret strategy, no incredible investment system. It had all been a Ponzi scheme. Mark and Andrew were stunned. Their father wasn't just successful, he was one of the most respected men on Wall Street, and the man people trusted with their life savings. And now he had just admitted to run one of the biggest financial frauds in American history. The brothers faced an impossible choice: protect their father, or protect the thousands of innocent people who still didn't know the truth. They didn't wait long to decide, and the very next morning, Mark and Andrew Madoff walked into the offices of the FBI and reported their own father. Later Later that same day, federal agents arrived at Bernie's apartment and asked him if there was any innocent explanation for what his sons had told them. Bernie looked at the agents and calmly replied, "There is no innocent explanation." Bernie was arrested on December 11, 2008, leaving an empire that had taken nearly 30 years to build but took less than 24 hours to collapse. But for the Madoff family, the real tragedy was only just beginning. When Bernie Madoff was arrested, the headlines focused on the billions of dollars that had disappeared, but the real story wasn't about the money, it was about the people behind it. Every dollar Bernie stole belonged to someone, a charity, a family saving for the future, a person who had spent an entire lifetime building something, only to watch it disappear overnight. Take Elie Wiesel, a Holocaust survivor, Nobel Peace Prize winner, and one of the most respected authors in the world. He and his wife had trusted Bernie Madoff with nearly $12 million of their personal savings, but the money wasn't the only thing they lost. The Elie Wiesel Foundation, created to support education, human rights, and victims of genocide, had also invested with Madoff. After the fraud was exposed, Wiesel didn't just call Madoff a criminal, he called him a thief of trust, because that's what Madoff had really stolen. Then there was Dominic and Ronnie Sue Ambrosino, a retired couple who had spent decades saving for the day they could finally enjoy life. And like thousands of others, they believed Bernie Madoff was the safest place for their money. They invested nearly $1.6 million, and in a single day, every dollar was gone. Sadly, their story wasn't unusual. Across the world, thousands of families woke up to the same nightmare. Retirees who suddenly had no retirement, parents forced back to work after thinking they had finally finished, and charities shutting down because the money they depended on had vanished. Some lost their savings, but for some, the damage went even further. Just days after the scandal became public, French financier René Thierry de la Villouche was found dead after taking his own life. For years, he had encouraged wealthy clients to invest with Bernie Madoff, and when the fraud collapsed, he believed he had failed every one of them, and the guilt became too much to carry. Then came the tragedy that shocked even the people closest to Bernie. On December 11, 2010, exactly 2 years after Bernie's arrest, his oldest son, Mark Madoff, was found dead in his New York apartment after taking his own life. For 2 years, Mark had insisted he knew nothing about the Ponzi scheme. No evidence ever showed that he had been involved, but none of that mattered in the eyes of the public. His last name had become one of the most hated names in America, and he spent 2 years living under lawsuits, media attention, and constant accusations. In the end, it became more than he could bear. Years later, the tragedy struck the family again. Bernie's younger son, Andrew Madoff, died from cancer in 2014 after publicly speaking about how the scandal had torn his family apart. Whether they were victims, friends, or even members of Bernie's own family, no one walked away untouched. Bernie Madoff's fraud wasn't just the largest Ponzi scheme in history. It was a chain reaction that destroyed fortunes, shattered families, closed charities, and left scars that would never fully heal. Because in the end, the biggest cost of the scam was never measured in dollars, it was measured in human lives. On March 12, 2009, Bernie Madoff stood in a federal courtroom and admitted everything. He pleaded guilty to 11 federal crimes, including securities fraud, money laundering, and investment advisor fraud. The sentence was as symbolic as it was severe: 150 years in federal prison. Not because anyone believed he could live that long, but because the court wanted the punishment to reflect the scale of the damage he had caused. By then, Bernie was already 70 years old. Everyone in the courtroom knew that he would never leave prison alive. For the next 12 years, Bernie Madoff lived in a federal prison in North Carolina, and on April 14, 2021, he died at the age of 82. There was no redemption story, no second chance, just a quiet death behind prison walls. But here's the question worth asking: how did one man fool the financial world for nearly 30 years? The answer isn't that Bernie Madoff was a financial genius. He succeeded because he understood something much more powerful: human nature. When enough people believe someone is successful, others stop asking questions. Investors saw steady profits and stopped looking deeper. Regulators received warning after warning but failed to investigate. Even experienced professionals assumed that if everyone else trusted Bernie Madoff, he must be legitimate. More than 15 years later, his story is still taught in business schools, discussed by regulators, and studied by investors around the world. This wasn't just the story of Bernie Madoff. It was the story of what can happen when trust replaces truth.